Hello, my name is Greg Mikulowski, and this is a Forex commentary for FX Street. Let's take a look at what I want to take a look at the Aussie versus US dollar, and in particular, I want to focus on this gap here, this market from Friday's high to the today's low, Monday's low. We had a gap in the price. So this is as a result of better data coming out of China, and perhaps a flight into risk as a result of the BIS, the Ball 3 decision that forced things like the euro up and the Aussie up as well. But most of it is because of the better than expected China data, which also benefits the Australian economy. So what we saw here was this gap higher over the weekend, and the market has not really looked back since that point. But what a lot of people do in trading is they always look for the gap to be filled. But I always warn that unless you have a reason to sell, don't sell. Because the market could continue to go higher. It can go higher for a week's time if it really wanted to, before the market starts to correct down and perhaps fill that gap in a week or 2 weeks or whenever it decides to fill that gap. So what I mean by a reason to sell is that there should be some sort of technical tool that you can use that will say the bias is turning from bullish to bearish. And so here I have the hourly chart up here, and I've drawn a trend line here, and a trend line shows the trend of the market. And you can see here that the trend is certainly to the upside here for the Aussie versus US dollar from Friday's trade. And even today, as we came down and kind of tested that trend line earlier and then moved to the higher, we tested it again here and moved higher. I mean, we didn't quite exactly get to the line like we did at this point right here here, but you can see how the market found support buyers against that level. This level, the low for this period came in at 93.26, and the trend line came in at 93.17. So would you risk 9 or 10 pips on a trade for a move to the upside, a potential move to the upside? Well, it appears that the market has done that. The market was looking for the Aussie versus US dollar to move higher, and in fact, it did. But now we are seeing a little bit of a topping here, and let's go to the daily chart, and we can see that perhaps the market is running into some pressure or some sellers against the old high. This high goes back to April of 2010. The high reached 93.88. The high for the day so far has reached a level of 93.60. So 28 pips away from that high. Is that enough for someone to take a position? Maybe it could for some people, but whatever the case, we are seeing a little bit of pressure here to the downside. But really, where the market is going to show you that the bias turns more to the negative side is if the market should break this trend line, and this trend line currently comes in at the 93.21 level. Are there any other clues that the market can give you that's maybe closer than the 93.21 level? And for that, I'm going to go to the 5-minute chart here. This is another one of those charts that I like to look at, and I like to apply things like the same moving averages. The blue line is a 100-bar moving average. The green line is a 200-bar moving average. And what we can see from this chart here is that apart from this little move to the downside here that once again tested that trend line, the market's been above the 100-bar moving average in the 5-minute chart. That 100-bar moving average currently comes in at the 93.33 level, and it's moving higher. So as opposed to the 21 level off of the trend line, support line, we can go to the 5-minute chart and we can sell if the market turns below the 93.33 level. That would turn the bias to the downside. Of course, we'd have to get through that 21 level off the trend line and also get through this 200 bar moving average in the 5-minute chart currently comes in at 93.20. So really 93.33, 93.20, get through those levels, and it should be some more clear sailing to the downside for the Aussie versus US dollar as it goes and reaches, looks to fill that gap down in between the 92.67 and 92.87 level. So there you have it, a Forex look at the Aussie versus US dollar for FX Street. This is Greg Mikulowski from FXDD. Bye bye now.